Hello everyone. It really seems like the world has gone crazy. Absolutely everything is getting more expensive: logistics, fuel, fertilizers, food, microelectronics. Yet the stock market keeps rising amid increasing prices and a growing impoverishment of the Earth's population. Nevertheless, we work based on technical analysis and we will do what we must: analyze the chart. In front of you are the weekly candles of the S&P 500 index, specifically the ETF fund based on this index. Multiply by 10 to get the index value. 7,067 points approximately as of now. 3 weeks of uninterrupted growth, and for 2 days in a row, we've been hitting new all-time highs on the S&P 500 index. And at the moment, there is not a single reason to sell. This happened last week. Look, we had a bullish engulfing pattern, and the current week has only strengthened this upward movement. Is it possible to sell here right now? No. Of course, it seems abnormal when everything in the economy points to a slowdown, the population is getting poorer, and yet the US stock market is growing like crazy. But this phenomenon is temporary. Nevertheless, based on the chart, we have no reason to open short positions, at least on the weekly time frame. Now let's look at the monthly candles. I'm removing all the markings. On the monthly candles, we see a potential engulfing of the March decline in April, with the possibility, once again, of entering a new wave of growth. But there's one thing that raises concern here. Look, the previous highs were accompanied by higher RSI values, but now we have a new all-time high, and the RSI is significantly lower. If we don't go much higher, we could form a very clear monthly scale divergence here, which would lead to a corresponding decline to the area, well, where? To the area of the 50-month moving average. Now let's take a look at the daily candles. On the daily candles, as we can see, even without any markings, we're witnessing another uninterrupted upward movement. The RSI has already entered the overbought zone, but there hasn't been a single bearish engulfing pattern, which means it's not time to short. At the same time, we're seeing new all-time highs. Now let's turn on the markings. What do we see with the markings? We have an ascending channel, but if you look at it from a distance, it looks something like this. And if you look at it up close, you'll see that we're approaching the upper boundary of this channel. In fact, we're already there, and from here, a pullback downward is possible. Buying is absolutely out of the question, but it's still too early to short. On the other hand, I'll show you my indicators, which I've introduced to you more than once, and there's a rather interesting picture there. Here we have 8 charts of E-mini futures for the S&P 500 index. And we can see that on the central chart at the bottom, these are 12-hour candles. There is extreme overbought, highlighted by a red arrow. The adjacent chart on the right, also a red arrow. Extreme overbought on the daily candles and on the hourly ones as well. This indicates that this is a very bad place to buy. It's also too early to short because there are no bearish engulfing patterns, but definitely not a time to buy. Let me just remind you that our review was on the Quant Fury platform. Here you trade without any commissions. At least that's how I do it, and you can join our community. See you next time. The next review will be about Bitcoin.